Thank you, Shachar. Now, just as advertising agencies used to consider Google as something of a frenemy, a friend and an enemy combined, it can also be difficult sometimes for banks to embrace fintechs. So what's the best approach? Well, our next keynote is on how to do a successful fintech partnership with a bank, as luck would have it. The speaker is Tom Hogarth. He's VP of Innovation, Framework and Strategies at TD Bank. Tom.
Can you, yeah, it's actually Tim. So I just have
yeah. I beg your pardon.
That's okay. Yeah, so I'm Tim Hogarth. I'm the VP of Innovation, Framework and Strategies at TD Bank. TD Bank is a very large North American bank. We're the 5th or 6th largest bank in North America with some 20 million customers. I'm going to tell a story today about working with fintechs in a bank. My job is to actually partner with fintechs and to drive innovation inside of TD. I'm going to tell you a story at the macro level, why fintechs are interesting to banks. I'm then going to tell you a bit about why they're interesting to us. And then I'm going to tell you some of the successes we've had, some of the stumbles we've made, and what our path forward is. And I'm going to start with a particular story around a discovery that was made a long time ago that's really, really important, and it changes really how you think about how one works with banks. And it starts back in the Korean War. And at the time, the American pilots were engaging their North Korean counterparts in dogfights over the Korean Peninsula. And the Americans were a bit worried because the North Koreans were being supplied with jets from the Soviets. Now, the Soviet planes had been significantly upgraded. They had bigger weapons, more armour, they were faster, quicker, nimbler, they were better in every metric. And so Washington was scrambling to fund the development of an equivalent plane to redress the strategic imbalance. They had a consultant on the project, one of the pilots, and his name was Colonel John Boyd. Now, the problem he had was that he noted, despite the apparent superiority of the Soviet plane, it was getting knocked out of the sky by the Americans at a ratio of 9-1. And he didn't buy it. He didn't work out why was the weaker plane being consistently beating the bigger plane. He didn't buy the American bravado that their pilots were awesome and just so much better. He worried that the Soviets had made some kind of design error, some kind of flaw, and then the American designers were going to unwittingly copy it. Why would a stronger plane on every metric be beaten by a smaller plane? Why would this bigger, better funded plane lose? So he looked at every single feature side by side to see what was the difference, and he finally, after weeks of comparison, found the difference. The older plane had a hydraulic stick, and this single advantage was enough to turn the tide of battle. See, when two planes enter three-dimensional space, they're trying to get behind the other guy and shoot him out of the sky. And they go through this loop that John discovered and christened the OODA loop. Two planes enter three-dimensional space. They observe each other, they orient themselves relative to their competitor, they make a decision, and then they act. Then all the variables have changed, and so they do this loop again. And what John discovered is that in a dogfight, it doesn't really matter how big your guns are or how strong your weapons are or your armour. It's whoever does this loop the fastest wins. And with the hydraulic stick, the older plane could do 5 manoeuvres in the time the newer plane could only do 3. Now, this has enormous implications in business, and we now call this Boyd's Law, which states that in times of uncertainty, the speed of the iteration is more important than the quality of the iteration. It is better to do 5 things well than 3 things perfectly. Now, this is a problem for banks. And the reason the problem for banks is we're now entering a time of greater uncertainty than we've ever had. My bank has been in business for 160 years, and for a long time, the business model has not changed. It's been the same banking model that's existed in society for centuries. And many of the products we have been upgraded, but they are very similar to products we've had for a long time. But now we're entering a world where people worry that the banks will get Spotify'd or Netflixed or Airbnb'd or Uber'd or something will come out. And so it's really important we have to start to think about how we actually organise. So one of the ways we organise is we go through this really methodical process when we want to build something. And this traditional model of doing it slowly and carefully makes sense when you're actually working in a very conventional business. It makes sense to plan, get it right the first time. And this has been very successful for us. We're a very well-liked bank. We've got a great engaged customer base. But it's also pretty risky when the sands are moving underneath us. And so we now need to think about how we move more quickly to this model, where we iterate at a higher rate so we can discover and learn. And suddenly learning becomes fundamentally more important than analysis. Learning becomes fundamentally more reliable than analysis. Now, if we want to talk about fintech specifically, a couple of years ago, people were thinking about fintech. I looked it up in the newspapers. It was in about 2013 and 14 when the word fintech came out, and the newspapers used to put quotes around it and put a hyphen, so it was FinTech. And at the time, all of the banks wondered if this was the moment if the financial industry was going to see a significant change. And TD established an innovation lab in a startup-centric town called Waterloo. We partnered with an incubator there. Some 4 years on, not all of the fintechs have actually, there hasn't been a fintech that has dominated banking. There's probably two reasons why. One is, I don't think the idea has come out yet, the killer idea that has captivated hearts and minds of consumers. Certainly not in Western economies. You could argue in Asia that that has happened in China with WeChat, but we haven't seen the idea come to fruition yet. But the second problem, and this is critical, is that in banking and in payments, it's unlike other kinds of app-based ecosystems where you need a massive amount of adoption before you can start to see value. And it turns out, as a fintech, any of you who have a company as a fintech realize it's really hard to grow a trusted relationship at scale. So banks have this. We are incumbents. But the problem with incumbency is it breeds complacency. So really what we want to think about is how we can actually start to merge these two worlds. And so when we think about embracing fintech innovation and getting the most amount of value, there's really four things that we're trying to actually achieve with the partnerships. The first thing is the entrepreneurial spirit. The power of the entrepreneur is astounding. The focus of one individual can really change an industry. If you look at the space industry, Elon Musk's SpaceX company didn't have more funding than NASA, didn't have more scientists. NASA had every single resource available to it, but the passion of that founder has fundamentally transformed, uplifted and reignited the space race. Entrepreneurial spirit is hard to build inside an incumbency. Another one is small team behaviour. All large organisations have large numbers of teams, and that means that teams spend a lot of time on transactional costs between those teams. Huge amounts of energy is spent negotiating or building consensus. And it is exhausting, but it also takes away your focus on fundamentally being on the product, or at least dilutes it. Small teams that are working in a startup are much more focused and can put much more of their energy into making those changes. Another key thing is that working with fintechs is an opportunity to learn. For us, with our 22 million customer base, we very much want to look after those customers, and to try and experiment and learn and do new things with 22 million people at once, it's very challenging. Working with fintechs, partnering with them, learning about their business model, helping support them, can help us actually increase that learning. And the last one, which is not particularly, well, it's particularly relevant to where I am in Canada, is that we believe that it's important to have a vibrant partner ecosystem. Particularly in Canada, we want the talent to retain and stay at home. We don't want them to disappear over to across the border, develop finished products that we buy back at a higher premium. So these are some of the things that we're embracing. I want to now quickly jump into how we've actually built some successful fintech partnerships. And this is some of the hard things. This was the hardest lesson we learned. We were always finding fintechs and bringing them into the company and throwing them at our business partners. And it just had a really low success rate. Turns out if you can do all of these demos and everyone gets very, very excited, but if you haven't got a business problem first, it's an entertaining meeting, not a productive one. And the reason being is there's this universe of really exciting and interesting problems that are solving, and there are companies around the world pitching and saying they're going to make fantastic changes, and I saw a couple of them this morning. There's a whole bunch of universe of these problems that are really fascinating that people solve, and inside of that is a much smaller universe of problems that banks are actually interested in. Sometimes fintechs will solve a problem that a bank doesn't want to solve, or they've already solved it to a satisfactory level. But the hardest part of all is discovering that, you know what, if the bank hasn't actually put it on their roadmap, it's very, very difficult to get the conversation going. It could well be an important problem the bank would like to solve, but if there is a sponsor currently or the attention and focus is in a different dimension, all of the conversations in the world with the fintech are going to have a lower probability of working out with the bank unless they're actually targeting one of the problems the bank's solving this year. So what we tend to do is we start with a problem. We look at our line of business opportunities. We work out, is this something we want to do? We then scour the world and we look to ecosystems like Tel Aviv. We look to ecosystems in Canada and in the US, and we find companies that can actually help us. And then we work out a commercial partnership. We sometimes take investments in these companies, very small investments. Once we've done an acquisition of an AI company, we bought Layer 6, one of the premier AI companies last year. And then we work out how to execute the partnership. And I'm going to tell you a couple of things that have worked well and some of the things I think we can do better at. So the first thing we worked out is strategy is really, really important. There are people in large banks, and I know they exist in my bank, that think that when you partner with a fintech, some of them think it's just cheap outsourcing. And it's a terrible, terrible model to go into because small companies are about entrepreneurs and the passion. They are not lower unit cost driven. So some people think banks invest in startups and fintechs because they want to make a lot of money from a unicorn. And while there are certainly some corporate development arms that do that, that's not the main reason my team is investing in fintech. We're investing in fintech because for those 4 reasons before, we're trying to bring that investment, that enthusiasm into the bank. The second thing is the risk model. TD is a very risk-averse bank and it served us extremely well. Throughout the global financial crisis, we weathered the storm better than many organisations around the world. Our conservative approach to risk has given us enormous value. Now, when we work with fintechs and small companies, it's important for our teams to understand that it's actually not a greater risk, it's a different risk. It's typically with a smaller set of customers, a smaller business problem, and the risk is different. If one doesn't understand that working with a large organisation, then the traditional weight of a risk department will assume this is about trying to bypass or add more risk. The third one is probably the most important, and that is that banks like TD, and we generate a lot of value by building a machine that can do things first time, right time, every time. Unfortunately, these processes tend to be one size fits all, and they kind of have to be. There are 22 million customers out there that we need to serve and keep happy every day, and we do that through being very reliable. But the one size fits all problem it's consistent, but it's not nimble. And it also doesn't deal well with ambiguity or uncertainty where the market has changed. So where we've had success is, I'll give one example. We have a corporate development arm that is exceptionally good at mergers and acquisitions, and we've done a number of these deals publicly over the last decades. But their process for acquiring a bank, which is a very large investment, they have checklists this long, they have lawyers, they have a whole degree of rigour that simply isn't the right size when one is working with a 3-person startup. So in partnership with that team and our Chief Financial Officer, we've designed a separate process which is much lighter weight, has different rules. Some of them I think are overbearing, but we have very tight rules. And what happens then is we're able to make these investments very quickly, very nimbly, with a different risk model, with a different process, still under the oversight of the same Chief Financial Officer. More and more we see we have to have 2 processes, one for the scale problems and one for the learning curve. And last of all, support, and this is a big one. When a fintech comes to us, if we can actually embrace them and find them a sponsor, that is going to lead to success. Without a sponsor, it's not going to happen. One of the things we do too is we'd spend a lot of money on intellectual property protection. And we've managed to carve out a percentage of our budgets to actually donate to fintechs, and we will help sponsor them and pay for their legal work so they can actually get their intellectual property protected and reserve that capital for building new things. This is about us ensuring that we build deeper relationships and make sure that we have in our vested interest that the startup is successful long term. The outcomes we've had have been exceptional. We've built great partnerships. We've made investments in 8 companies. We've built relationships with many more, and we've started to learn a lot. We've managed to acquire some of the world's best talent. With our acquisition of Layer 6, we got some of the best data scientists that Canada and the world had to offer. Culturally, we're starting to see some changes in our organisation, that readiness for a high level of pace. And we've also managed to deliver some excellent customer outcomes with our partnerships with several fintechs. Thank you, everybody. I'll go with it.